News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
President Trump's demands on Fed Chair Jay Powell to act on rates are renewing concern about the president meddling with central bank policy. Claudia Sahm, a former Federal Reserve economist, says it is a real concern.
I take it very seriously. And this administration has taken steps, whether it's with the tariffs or with downsizing the government, that really were beyond expectations. So the unthinkable is thinkable with this administration. Claudia
Sahm is currently chief economist at New Century Advisors, and concerns about Fed independence also have gold on the rise again this morning. Earlier, it topped $3,500 an ounce for the first time. Right now, it's at $34.70.
Well, Nathan, the S&P 500 is down by 9% since Trump unveiled sweeping tariffs earlier this month on most U.S. trading partners. The chief economist of Apollo Global Management, Torsten Slok, says a recession is the most likely scenario if the current tariffs take place.
Maybe we'll take a few more weeks, maybe in the worst case a month or two, but we will eventually begin to see the net effect if these tariffs stay in place. And that's why we think there's a 90% chance of a recession if these tariffs stay at these current levels.
And Apollo Global Management's Torsten Slok says foreigners own $19 trillion of U.S. equities, $7 trillion of treasuries, and $5 trillion of U.S. corporate bonds, accounting for about 20 to 30% of the total market. He says the unwinding of those holdings could cause substantial pain.
And Karen, Bloomberg Economics estimates President Trump's tariffs would shave about $2 trillion off global output by the end of 2027. We get that part of the story from Bloomberg's Amy Morris in Washington.
Analysts find that the president's so-called Liberation Day tariffs will mean a historic shock to the world GDP. Bloomberg economics analysts find that for the U.S., Trump's tariffs act like a massive tax hike and is considered a major shock. They say one casualty could be Fed independence. Whether President Trump attempts to fire Fed Chair Jay Powell or waits until the end of his term, it now does look likely that the next Fed chief will be picked at least in part based on alignment with Trump's policy preferences. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. President Trump met with major retailers at the White House as executives sought relief from tariffs that have destabilized global supply chains and rattled U.S. consumers. Jordan Fabian is Bloomberg News White House editor.
That China 145% tariff looms large over this conversation, and you start to do work at cross purposes when you have these companies coming in asking for relief, and you have, not to mention these Southeast Asian countries who have higher rates as well, questions about transshipment, et cetera. These are a lot of issues to untangle, and so it's unclear where this is going to end up as a result of this meeting.
Bloomberg's Jordan Fabian says the meeting included representatives from Walmart, Home Depot, Lowe's, and Target.
Yeah, and the tariffs are already starting to hit some firms in Japan, Karen. A survey of more than 500 companies by Japan's Ministry of Finance shows about 10% of them say the measures have affected their businesses. The CEO of Japanese beverage giant Suntory Holdings says tariffs could make companies reluctant to invest in the U.S.
Current tariff situation is losing the appetite from other countries to the United States. So this is really, killing the appetite from the world to the United States. So we are losing the appetite to invest in the United States.
Suntory Holdings CEO Takeshi Ninami warns U.S. tariffs could reduce Japan's GDP by as much as 1.2%.
Well, Nathan, one of the hardest hit stocks during the recent market sell-off has been Tesla. And this afternoon, the EV giant will report its first quarter earnings. And we get a preview with Bloomberg's Tom Busby.
It's been a tough start to the new year for Tesla. Shares have lost about 45% of their value so far in 2025, and it posted weaker than forecast Q1 sales earlier this month. The reasons? An aging lineup, few details about more affordable EVs to come, and a lot of backlash against CEO Elon Musk for ties to President Trump's cost-cutting DOGE task force and support for far-right politicians in Germany. Consensus calls for adjusted earnings per share of 44 cents, total revenue of $21.43 billion. Tom Busby, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.